Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, on this wonderful Wednesday for what is going to be nothing short of another jam-packed daily market update. And we're going to be starting this update off, and it's going to be a theme of this update, by looking at some comments made by Paul Tudor Jones, one of the greatest investors of our time. And he is talking about an issue that directly affects each and every one of us. Of course, he's talking about inflation and the proliferation of the monetary system and why he is long gold and Bitcoin. Now, we have, and we like to use the Japanese yen as an interesting analogy for what's happening more broadly around the world. We always say that the Nikkei, which is the Japanese sort of stock market or the Japanese index, is essentially a short yen, the native currency of that country, trade. And actually, stocks, houses, assets, commodities generally have become that also, because this is the great game that is being thrust upon each and every one of us. And the sad thing is most people simply don't know about it. More and more people are waking up because it's becoming more and more obvious. But there's a game of monetary proliferation without representation in regards to your wages, the things that you work your fingers to the bones quite often for over the course of your lifetime. You spend more time at work than you do anything, which is directly dictated by money, which is totally controlled and manipulated. And that's why many people sort of pit Bitcoin up to be this savior. An interesting concept that I want people to think about, and I think it's going to be a real catalyst for gold demand and silver demand, is the tokenization of those assets and the implementation of them in regards to playing a similar role to what Bitcoin is currently playing around the world, being that sort of store of value that allows people to somewhat escape the matrix. So we're going to be starting the video off there. We're going to be looking at public debt and the sort of insanity of what's currently going on right now. Obviously going into an election, so you do need to factor that in there. Then we're going to be talking about the largest stock market in the world, the US stock market, in relation to global monetary supply and global liquidity, because it's relevant to the first topic. We're talking about the Dixie. Dixie very strong recently. I think there's a number of things going on here. And that, of course, is leaning on assets. We need that Dixie to roll. And there's been an element of Dixie weakness in every single Bitcoin bull market and every single increase in global liquidity, certainly since 2008, when the old system really started to show signs of puffing out. And then we'll do a little bit of Bitcoin analysis and finish things off on some XRP news in relation to the appeal from the SEC. There was a document that circulated saying the court has not received the acknowledgement and notice of appearance on the due date, October the 18th, which was the deadline, 2024. So there's going to be some twists and turns in regards to XRP, I'm sure. I'm convinced it's going to play a role in the new monetary financial system. Just my opinion. Don't hate me for it. I just think I see enough evidence to suggest this being the case. So let's dive into Paul Tudor Jones' comments. This is all over Twitter, ladies and gentlemen. Paul Tudor Jones, very successful investor. He talked about the economy more broadly, but one thing that he certainly spoke about was why he's ultimately long gold and Bitcoin. And we were going to do a lot in this update. One thing we were going to do was kind of expose Michael Saylor for... I don't want to be too mean about Michael, because one thing I can absolutely applaud him for is how amazing he's been with MicroStrategy. MicroStrategy, the best performing. It's now in the S&P 500. It moved up from the IWM. Obviously, it's graduated in terms of market cap to the S&P 500. Best performing asset in the whole of the S&P 500, and it's essentially just a Bitcoin derivative. So he's been very smart in taking what was an entirely dead company. A lot of the companies that came about in the dot-com boom like he did, and then obviously went through the crash, have gone on to become some of the largest companies in the world. Michael Saylor's hadn't, but it may be on that trajectory through essentially Bitcoin. But I think his ideas and possibilities, and I think he's very disingenuous in his reason for actually backing Bitcoin, is far more about himself and to make money than it is kind of libertarian principles that a lot of the Bitcoin sort of people coattail on the back of, whilst applauding institutional and kind of a hostile takeover. It's a lot more complex, that debate. But let's dive into Paul Tudor Jones, see what he has to say, and then we're going to talk about debt and what's going on right now, the monetary supply, of course, how this relates to assets, why this is important for us as investors, Bitcoin, and everything else.
Given all of the things you're saying, are you off buying gold and Bitcoin and
I think all roads lead to inflation. We're going to end up
But does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out.
Given all of the...
And that is the playbook more globally. We mentioned Japan. The Nikkei is a short yen trade. We're going to come on to this. And we'll look at this in a little bit more detail in regards to inflation and what that truly means. And inflation of the monetary supply or devaluation of it is the flip side of it. He mentions NASDAQ, owning NASDAQ. This isn't the best. This is the US 100. We looked at that squeeze to the upside. We're seeing lots of squeezes to the upside for lots of different charts. I want to pivot into the NASDAQ very quickly because we actually have higher targets on the NASDAQ. Or potential higher targets. NASDAQ looking very good. This is just squeezing to the upside, just like the SPY, just like many things out there. And this proliferation game is going to continue. And it's our bet that Bitcoin is going to be and has been the best performer in this environment. And we're likely going to see continuation of that. But it's important for people to stay vigilant in regards to why we applaud people in being investors in relation to escaping the great game that is being thrust upon you. You know, think about how pivotal money is in life, and it's totally controlled and manipulated. And ultimately, in my opinion, for your impoverishment, their idea of equality is everybody equally poor, not equally rich. This is really interesting, and we've reported on this on a number of occasions, but I want to continue to do so. This is US Treasury public debt outstanding. You can't make this up. Total US debt has jumped by $473 billion over the last 3 months alone, to a record 35.8. Wasn't that long ago we were at 35 trillion. We're now adding trillions in a month or so's time, you know, or will be in a month and a half sort of time if this is to continue. This directly impacts you. This is inflation of the monetary supply because money is just debt. And there's going to be a kind of a reset, I believe, and there's a plundering going on right now in regards to their hyper-proliferating it. Another interesting thing here is back in 2008, the Great Financial Crisis, when a lot of this started, certainly if we look at the acceleration of global monetary supply and we look at the acceleration of global liquidity, look at when this really started. On the back end of 2008, look at when the Dixie entered that channel that saw it gain dominance since 2008. There was kind of a secretive... not quite Bretton Woods that took place, but to stick to the topic at hand, it's very interesting, isn't it, that in 2008, I think it was 700 billion, and we're seeing that in 3 weeks without a crisis situation. That's how far things have come just since 2008, and this is why assets are where they're at and why, as long as this system remains intact, there's going to be continuation of it, and Bitcoin was designed specifically to address this problem. And then we can go into, okay, well, the crypto market generally moves off of Bitcoin, but fundamentally really should move in difference to Bitcoin due to different use cases being achieved with distributed ledgers. You know, do we see that decoupling eventually? This is all stuff to think about later on down the line, but we'll stay vigilant on. This means the US has taken up 1,450 of debt for every American over the last 3 weeks. It also means that the US now holds a record 103,700 of debt for every American. In 2014, the US paid a total of $1.16 trillion of interest on this debt in the first year above the 1 trillion mark. And the problem that you've got is, I'll just continue this, in interest alone, the US paid $3,360 for every American during the fiscal year of 2024. What is the long-term plan here? The interesting thing is, once a country's debt expenditures exceed its ability to earn, it's the beginning of the end. And And we are hurtling towards a global reset, and I think that was set in motion from 2008. Very coincidental that crypto has sort of came about during this time period, and we're seeing an acceleration of it, and certainly an adoption of it by some of the largest institutions in the world. This is all stuff you should think about. I did a great meeting. I think it might not have been Sunday. This Sunday just gone, because we covered the crypto space more broadly, technically, and looked at it from a basket of things. But we looked at global liquidity. Everyone talks about global liquidity. Various different, whether it's RALs, GMI, Global Liquidity Index, whether it's cross-border capitals, they all show kind of different things in regards to how they measure liquidity. Liquidity is measured by a number of things. Central bank balance sheets, I think, is more global liquidity. And then you have global monetary supply. And we've got both here. So we've got global liquidity, which is still really downtrending, which is how a lot of smaller cap stocks in the altcoin markets look and follow more closely, because this global liquidity that's still sort of downtrending is largely based on central banks' balance sheets, and the Fed is still winding theirs down to a degree. They're adding little bits. Europe, very much similar, but something like China and Japan still obviously increasing. So the larger ones kind of win, and obviously UK in the same boat as kind of Europe and America. But global monetary supply is just accelerating on the back end of largely China and Japan and some other countries out there. And getting there also with certainly America, Europe not so much. And the larger assets like the S&P will really follow this more closely because they're global. They're seen as a global investable, more trustable vehicle, whereas the smaller ones that are internal to countries, like some of the smaller cap stocks in America or crypto more broadly, need to see that general global liquidity uptick. So there's a bit of a discrepancy here between, but we do think that's coming. There's a discrepancy here between, and that's going to be led by central bank policy. There's a discrepancy here between large caps with M2, global M2, and smaller caps with global liquidity index. But what Paul's highlighting and what I'm trying to highlight here is that there's going to be continuation of this regardless. And this is ultimately going to see things. What assets largely are now aren't so much traded off internally what they do, more so traded off proliferation of the monetary supply, and that fundamental reasons behind them sort of allows them to perform better or worse in regards to the great game that's being thrust upon everybody. But it's very interesting, this, isn't it? So we've got global M2 and we've got global liquidity index. You can see just how these move it perfectly in sync, and there's been a real acceleration since 2008. And ultimately, we do think the system is on the cusp of dying. Let's talk more broadly about where we are. So we know that ultimately, speaking about the fundamental reason to why Bitcoin was created and why it's going to continue to do well, we know that we've got a lot of technical confluence in regards to the direction that we think Bitcoin is now about to embark on. You are just, I believe, on the cusp of completing this pullback. I don't think it will take long at all. We bear the brunt of frustration as a channel that puts themselves out publicly when it comes to the cryptocurrency space, certainly with the bullish narrative that we've had since the start of 2023, because people get frustrated. We've been going sideways, or Bitcoin has been marginally downtrending, and altcoins got really hit hard under Bitcoin's weakness since March. You've got to be in it to win it. The markets are very good at taking money from the impatient and giving it to the patient. That's what this game is all about. It's all about taking money off of you guys. And they play a longer game than we do. This is why technical analysis is so important. But I do think it's not going to be long before you sort of start to seal the deal here. Bitcoin has done okay during the dollar strength, but we need to see that dollar strength. And we've looked at reasoning behind this to see, or really be a barometer for what will happen with global liquidity. And thus, there's been a period of dollar weakness in every single Bitcoin bull market. But this dollar has been really strong. I think this was a technical level that you were likely to bounce off in and around here. There was a little bit of funny business going on here. I think there's a lot going on. Obviously, they did that 50 base rate cut. That's not going to continue, I don't think. And I don't think they need to continue at that pace. And markets always get ahead of themselves, and there's that repricing, or the central banks have to go and do their cuts, and then there's that readjusting. But the ultimate direction for the dollar, in our opinion, is still to the downside. We were expecting a sort of rallying around here on our roadmap. We just didn't expect it to be strong. So we do need to see this sort of fall. But that strength, assets have still done well in the face of, and I think that's because they know more broadly what's to come, and they're kind of shaking off Dixie strength, which is typically not so good for the market. So just hang in there with crypto, guys. When we look at the totals, we really don't think it's a bad picture. When we look at altcoins, we really think it's a very positive picture as a whole. We did cover this last week quite a bit. So last week, we had the likes of Jeremy Hogan, an attorney who had really followed the case, coming out and saying that The SEC essentially didn't file their appeal in time, which would result in a dismissal. There was then news that they did, and now this has been circulating all over the place. This is from Emily. Breaking new Ripple versus SEC filing from today. The court has not received the acknowledgement and notice of the appearance on the due date of October 18th, 2024. Remember, if they do not comply with requirements within 14 days, their appeal will be dismissed. And this came out yesterday, United States Court of Appeal in the Second Circuit. Acknowledgement and notice of appeal, default notice. So it says, pursuant of the Second Circuit's rules, local rules 12.3, the appellee consul acknowledges and notice of appearance was due on October the 18th, 2024. The court has not received the acknowledgement and notice of appearance on behalf of the appellee counsel. If appellee counsels does not file an acknowledgement, a notice of appearance within 14 days of the date of notice, when the appeal is placed on the calendar, appellee counsels will not be heard at oral argument except by permission of the court. And it's quite likely that they will. It's the SEC. It's a government agency. They're likely going to get let. If anyone's going to get let out for this, it wouldn't be the little guy, would it? It would be the SEC. So a hell of a lot going on. We understand and we can appreciate the frustration in the cryptocurrency space right now. Don't forget why we started with Paul Tudor Jones is there's a greater game going on here. It's of the utmost importance for us all to understand it because it's going to help us. Great saying out there. You can have more than you've got by becoming more than you are. And I believe through understanding, having the knowledge, people say knowledge is power. How many knowledgeable people do we know that just sit on the couch and do nothing all day long? I think knowledge is power, but only when it's put into action. And I think when you understand the great game that's being played upon us and then you do things to help you and your family out, like arbitrage that game through investing in the right vehicles, you can ultimately enrich not just your life, but everyone around you's life. And that's what we try and do here on the channel. Interesting news in regards to Paul Tudor Jones. The great game is one that's set to continue up until they sort of decide they want to change the rules. Dixie strength, leaning on assets a little bit, but we do think technically there's a lot of confluence that sees the cryptocurrency market continuing this upward trajectory. I don't think you're seeing anything out of the ordinary. An interesting news on the back end of the XRP or Ripple Brad Chris versus the SEC lawsuit. That's it from me, guys. I'm going to love and leave you. Thanks for watching. See you all in the next one.